The Bank of Canada is expected to cut the 5-year mortgage rate to a near record low, and if they do, is it possible we might see a surge in market activity that resembles 2017? We're going to talk about all of that today, coming right up. Hey guys, Fred Tam here, and welcome back to a new episode of the weekly Toronto Real Estate Market Update. If this is your first time here, welcome to the channel, and I'm here every single week giving you the best real estate tips and latest market updates. So if you're new here, consider subscribing. And today we're talking about the Bank of Canada's decision to potentially reduce its benchmark 5-year mortgage rate to 4.79, and reducing the rate changes the mortgage stress test by making it a little bit easier for borrowers. And just a quick refresher, under the stress test, borrowers need to prove to lenders they can afford a mortgage interest rate that is either 2 percentage points higher than their actual contract, or at the Bank of Canada's benchmark 5-year mortgage rate, whichever is higher. And some of the average rates I'm seeing these days are floating around the 2% mark, which means borrowers would have to qualify at the Bank of Canada's benchmark rate, which is now expected to go down from 4.94 to 4.79. And just to go back even a bit further, the reason why the stress test was created and introduced in 2016 was to ensure that borrowers were not taking on more debt than they could afford and to cool down the heated housing market. And this eventually worked and prices came back down. But now the new rate we're expecting to hear about is just slightly above the all-time low from July of 2017, which was 4.64. And if you recall what the market was like back then, the impact of a record low mortgage rate created a home buying frenzy with local and international buyers. The sudden increase in buyer activity created what seemed like an overnight deficit in housing supply, causing home prices pretty much everywhere to skyrocket, and the market went through a correction period. In fact, some areas are still struggling to reach those prices again in today's current market, which is an indication that some home buyers were possibly overpaying for their homes in 2017. But if it was meant to be a purchase for a long-term investment, then the idea of overpaying doesn't play as big of a role in the overall picture. Because in the current market today, borrowers have adjusted to the stress test and home prices have gone back up. In fact, if you compare average home prices from this year to last year, the only time period when prices were significantly lower than 2019 up until mid-August was early on during the pandemic, for about 1 month. And recently, prices have been fluctuating up and down for the past few weeks, with last week's average selling price at just under 1.4 million. And this time last year, the average home price was 1.12 million under normal market conditions. But overall, prices are still balanced when we look at the average prices since June, with signs that they might be coming down. So now a reduction in the benchmark rate would actually make it easier for borrowers to qualify for a loan. And this also means buyers will be encouraged to stay active in the market, since the rate change will make qualifying for a loan easier and in many cases allow them to borrow more from lenders. But market activity has been showing a drop in home sales. Sales came down by about 26%, down to 274 homes that sold last week. And you can see that the trend is following what we saw last year during the summer as market activity came down. This is common to see in the summer just before the fall real estate market. But is it possible with home sales and prices both coming down that we'll see a busier fall market if the Bank of Canada lowers the benchmark rate? Let me know in the comments below what you think, and keep in mind that during this time, several homeowners could be facing financial difficulties due to the lack of employment opportunities, and this could result in distressed home sales if mortgage deferrals and government assistance are no longer available options. This would also increase housing supply, which in fact has gone up. New listings are up 8% compared to the previous week, with 556 homes that were listed on the market. In the last 12 weeks, more than 6,500 homes were listed for sale. And in the 12 weeks before that, there was about 2/3 of that number, with just over 4,000 homes listed for sale. So considering that inventory is high and both demand and prices are falling, then it's possible we might see the fall market not being as strong as we're used to seeing in a regular market, which was a possibility that the CMHC's summer market report referred to. The other side of the story is that if the reduction in the benchmark rate would make it easier for borrowers to get a bigger loan, this could add more fuel to the condo market for first-time home buyers looking for affordable housing options or existing homeowners looking to qualify and purchase an investment property. But before we get into how the condo market has been changing, give this video a thumbs up if you're learning something new and gaining value. And also share this video with someone you know who's been curious about condo prices and where they're headed. Because condo prices are actually up 5% from the previous week, with an average sale price of $695,000. And that's not quite the same level of prices we saw earlier this year when they were averaging $743,000 at the peak in February. But you can see that even though prices have been fluctuating up and down for several weeks, overall prices have been trending up. And normally I would attribute this to sales volumes, but sales are actually down 33% with only 290 condo units that sold last week. And this is the second week in a row we've seen a drop in sales, which could be an indication that the condo market has slowed down. And if sales are falling, then there's really no reason why prices should be going up, especially when condo inventory has also been going up. New condo listings are up 10% from the previous week, with more than 1,100 condos that were listed for sale. But what's important to keep an eye on is the number of condo listings that have been taken off the market. During the same week when we saw more than 1,100 condos listed, almost 40% of them were taken down. This is something that needs to be carefully considered because in a healthy market, you typically don't want to see more than a 3-to-1 ratio between new inventory and canceled listings. Because a ratio that's higher than this could be the result of sellers losing confidence in the market and pulling down their listings, which decreases the overall amount of inventory available in the market. And because the Bank of Canada already indicated that the intention is to purposely keep rates low until at least 2023, then the Canadian real estate market becomes attractive to local and international buyers. In fact, lower mortgage rates would also tend to push housing demand higher and protect prices by keeping them up. But do you think it's possible we might see market activity reach the same levels we saw in 2017? Drop your thoughts in the comments section and let me know where you think the fall real estate market is headed. So now let's recap on the market stats from today. Home prices in the freehold market have been fluctuating around the same levels for several weeks, but they might be starting to trend down. Sales made a sharp decline by 26%, and there appears to be no concerns with new listings, but together with prices and sales, it could be a bad time to sell your home with too much inventory available on the market. And now with condos, prices have been rising and trending upward, but sales are down 33%, so both freehold and condo sales are down week over week. Yet new condo listings are still over 1,000 per week for the 5th week in a row, which is something to watch out for because if inventory continues to rise, then the options really open up for buyers and should bring down prices and making it a buyer's market. And to stay updated on the changing market, subscribe to my channel and hit the notification bell so you never miss an update. As always, thank you for tuning in and taking the time to watch my videos, and I'll see you guys next time.